Hello folks, and welcome to this week's very special presentation on smarter short searches. My name is Steve Chappell, the Director of Trading Systems Development here at VectorVest, and I'm delighted to be your host for this presentation. Let's jump right into it and take a look. So the first thing to cover is that our core philosophy, of course, is to both buy rising stocks, good quality stocks, rising in price in a rising market. And of course then our core philosophy has always been to sell poor quality stocks falling in price in falling market. And so from that standpoint, the next subject we ought to tackle is, what does it mean to short stocks? When an investor goes long on an investment, it means that he or she has bought a stock believing its price will rise in the future. Conversely, when an investor goes short, he or she is anticipating a decrease in the share price. Short selling is the selling of a stock that the seller doesn't own. More specifically, a short sale is the sale of a security that isn't owned by the seller, but that is promised to be delivered. That may sound confusing, but it's actually a simple concept. You see, when you short sell a stock, your broker will lend it to you. The stock will come from the brokerage's own inventory, from another one of the firm's customers, or from another brokerage firm. The shares are sold and the proceeds are credited to your account. Sooner or later, you must close the short by buying back the same number of shares, this is called covering, and returning them to your broker. If the price drops, you can buy back the stock at a lower price and make a profit on the difference. If the price of the stock rises, you have to buy it back at a higher price and you lose money. Typically, you can hold a short position as long as you like, although interest is charged, of course, on margin accounts. So keeping a short position open longer costs more money. You can be forced to close a short position by the broker if they want the shares you borrowed back. This is known as being called away. And so anybody familiar with options terminology, I'm sure is quite familiar with the concept of being called away from the covered call trade. Same thing applies with shorting stocks. Now, there's a special report in the views under special reports called or titled, How to Short Stocks with Confidence and Make Big Money in Bear Markets. At the bottom of that is a very important section that we wanted to bring to the forefront of this presentation this week, and it's titled Things Not to Do. You never want to sell stocks short in a rising market. You see, that's a simple violation of our core philosophy that we covered earlier. And with number 2, never short a stock that is rising in price. You know, this is the worst mistake that a lot of investors and traders make, is shorting stocks that are on the rise. Nobody knows how high a stock can actually go. So never short a stock that is going up in price. You know, VectorVest's relative timing indicator makes it extremely easy to know when a stock is in an uptrend or a downtrend. RT above 1, the stock is still in an uptrend. RT below 1, the stock is in a downtrend. So you want to primarily focus on stocks already in established downtrends. Things not to do, number 3. Never take a big loss on a short position. VectorVest provides a stop price on every stock in its database. Folks, the stop price is designed to serve as a guide for covering stocks that are short as well as selling stocks that are long. It's based on that 13-week adjusted moving average adjusted upon the fundamentals of the company. It's very smart. It's very intuitive. Use it as a guideline. Things not to do, number 4. Never own a short position in a stock that has a buy recommendation. You see, a stock's price needs to be above its stop price and rising in price to get the buy. So, therefore, owning a short position in a buy-rated stock violates the prior rules that we just discussed. The bottom line, folks, focus on stocks falling in price that have poor quality fundamentals that do not carry buy recommendations, whose RT values are less than 1. And so let's get into some style of short selling. You see, there's always people who want to try to maximize every single trade and every single investment. And there's a couple of different approaches to try to accomplish that. One is the high flyer approach, literally trying to short stocks at their peak. And the other, of course, then would be, in contrast, to go with the high momentum or go with the flow of the market that's already been established on the stock that you're getting ready to sell short. Let's take a look at what that means visually. And so here's an example chart on a high flyer that you could have picked out from one of our shorting strategies on our October 11th confirmed down call. The stock was in a terrific uptrend, came up, hit a peak. Now, for any candlestick trader, there's a very interesting pattern up there called a bearish harami. And so that may have given one some confirmation that the stock really could be at its peak. So in many cases, a lot of the perfect storm was kind of developing here. But what I want you to really focus on is that the stock is in this terrific uptrend and you're getting ready to go short that instrument. That kind of trading, that kind of investing on the short side of the market can be treacherous and have severe consequences. And you're going to get a little taste of that, a chance to see that in this presentation. It can also reap, of course, extreme reward. So that extreme reward increases the amount of risk on the trade, however, and that's the trade-off that you're making when you take this stylistic approach. You're able to catch a position literally at its peak. Here's another chart. This is an example chart of a high momentum type of a trade. Same confirmed down call, but what you have here with Teva is a stock that's already in an established downtrend, thus the high momentum. It's even hitting a new low at the time one would consider entering. And you can see, we have a saying here around VectorVest, what you see is what you're likely going to get. If the stock is already in an established downtrend, you're far more likely for the stock to continue in a downtrend than it is to reverse on you right away. Now, there's no certainties in the stock market. What we're talking about in dealing with is establishing the likelihood. Stocks that are already falling in price are far more likely to keep falling than stocks that are in uptrends at the time of the execution of the trade. And so I went and did a little research. You see, I took all the high flyer searches found in VectorVest. There's 8 of them that are truly high flyers. There's some others that are questionable, but these are the 8 that are truly high flyer types of shorting searches. You've got Vern's Vultures, Sector Peak, Ballistic New Highs, Pirates, Crash Landers, just to name a few. And what I did is I ran them over the last several confirmed down calls to literally the bottom of the market, just a day after the bottom, to add a little touch of realism. And what you can see here is, on average, the performance of these high flyers from July 2nd of 15 to August 26th of 15 was 12.48%. Well, if you went with more of a high momentum search, like worst stocks over 20, you know, VectorVest has been in business for a long time, and we know and truly believe and have experienced that high VST vector stocks tend to go up over time, and low VST vector stocks tend to go down over time. This is a classic example. That little search beats the pants off all of the high flyer searches. Let's take a look at the next turn. So here we're looking at the high flyer searches from December the 9th of 15 into the February bottom of last calendar year in 16. Here again, you can see some terrific performance from the high flyer searches. And you know, you had a chance with Vern's or Nomo Mojo to land 36 or 39%. The basket, or the collection of searches, the average performance there is 28%. Not a bad way to go. Worst stocks over 20, 38.85%. All right, so let's take a look at the most recent little tiny downturn. Okay. With the high flyer searches, they averaged 10.39%. You can see the average performance row there at the bottom. You had a chance to catch about 16% with a couple of searches, or you could have made a paltry 0.5%, just depending on which one you chose, right? Well, if we took worst stocks over 20, didn't perform quite as well as the average of those 8 searches, but it was pretty close. And what were your odds that you picked Vern's Vultures over Ballistic New Highs, which also tends to be a terrific high flyer search? Now, you know what they say, a picture's worth 1,000 words. And so I'm going to take this away from just numbers and tables and move us into the platform here so we can look at things visually. Let me show you what we're really talking about here. All right, and here in VectorVest, what I'm going to do is go back and focus on this last little downturn in October that led into the November low. So first thing to do is just show you a picture of that. So if I go to graphs at the top, over on the left, we'll go to market timing. And I'm just going to focus on the composite price. So what we're going to focus in on here, we're going to look at October 11th as a time where, you know, you're coming out of the consolidation, the market's breaking down, and lo and behold, if I click on confirm calls, it's the same day of a confirmed down. And of course, the market headed down. We're going to look at shorting stocks from the confirmed down to the fruition of the blast off that we were looking for in the views when that he wrote up on 11.4 in the strategy section. Okay, we warned you that this blast off was likely just around the corner. So that's the time frame. Now I also looked at, just for your own edification, I did look at the prior 2 downturns that had significant downside action. It doesn't make any sense to study, at least for the purposes of this presentation, the shorter, tougher activity. What we wanted to do is just solidify what's the better way to go. High flyers, high momentum. All right, so let's go back into Unisearch. So here in Unisearch, of course, there is a search directory over on the left. If I scroll down, there is a searches short category. And in here, you've got a lot of terrific searches, some high momentum, some high flyer. First thing I want to do is go back to that October time frame. We'll go right to the confirm down on the 11th, so that when I come over here, I can run a few searches and we can examine the result, just like you saw from the table, but also look at the graph so you get a better picture of stock performance. First little search we're going to choose in here is called Vern's Vultures. So if I select Vern's Vultures, what makes this a high flyer is the sort. You're looking for stocks whose price is furthest above the stop price, indicating they're on terrific price runs. The real strategy here is trying to catch stocks as they're peaking and sell them short. Well, let's see what would have happened had we shorted a basket. So if I run the search, I can quick test the top 10, and we'll just run that test to the day off the bottom. Now remember, we're short, folks, so what you see here is a test where most of the stocks did exactly what you wanted them to do. CLCD went from $36 down to $29. We were able to borrow the stock from our broker at $36, sell it back at $29, and we keep the difference. So that decrease is actually profit in the portfolio sense. We want to see red. The average stock went down 16%, vastly outperforming the market of 1.5%. But let's dig a little deeper. What I'm going to do is graph these. You can do it right from the quick test. And we're talking about taking the stock right back here on 10.11. The stock has had a terrific run up. If I put on the stop price, certainly well above the stop. So there's a great disparity between the two there. And that's the anomaly that you're trying to capitalize on. And of course, the stock did regress, but look at it recover. Let's look at another one. Now, this one took a little while to even get going because the stock's in a terrific incline at the time of the short sale. Let's look at another one. Well, this one we nailed pretty good. This one not too bad either, although it would have given you a little heartburn for a couple of days. This one, boy, well, you know, that would have paid off big rewards. And that's for taking on the added risk. Sometimes you're going to get a little extra reward. But how about this one? Most of us probably would have held on to that far too long. That one would have worked out fairly well, but maybe not so much with that one, or even that one. And that one's okay. How about this? What if I run this little search? We happen to catch November the 10th, which is still in a downturn. We haven't received the confirmed up call yet anyway. So what if I needed a replacement stock or two and I ran the search on November 10th? Anybody ever heard of dry ships? Let's take a look at that graph. Yeah, we would have taken that one right here. How would that would have worked out for us? Stock went from, close on that day of 1190 to a close here on the 15th of 73. High over 100. Of course, I know what you're thinking. You'd love to grab it here. Yeah, but what if it kept going up the next day in the same magnitude? You don't really know. And so that's the risk at going and trying to capture the high flyer. Is a lot of times they're in parabolic moves, and there's nothing says that it's guaranteed it's going to reverse the moment you execute the short trade. And this is a great little short search, this Vern's Vultures. In fact, it's phenomenal. But there are going to be anomalies like this where a really bad stock that's not making any money, like dry ships, for whatever reason, irrationally starts to shoot up in price, dropping the relative value into a range well below 0.75, which is the requirement, just because the price is on such an outrageous incline. And so really, you're dealing with a situation that you never really wanted to get into to begin with. And so let's go back to October 11th and just investigate a little bit more. Let's take a look at ballistic new highs. Great short strategy. Also one of the better in the database in terms of raw performance, not looking at the real day-to-day activity of the stocks that you're trading. And that's why it pays to do some examination. So we'll run the search. We'll graph the top 10. And we would have grabbed this little booger here. Had a pretty good time. Would have given us some heartburn for a little bit and then came down. How about this one? It really took some time to get going, didn't it? That one probably didn't work out too well. And remember what we said. What you see coming in is likely what you're going to get into the future. And sure enough, that's pretty much what happened. The stock just kept on rolling. How about this one? Yeah, that probably would have caught most of us too, I think. That one worked out okay. Not so much. And so I hope you get the picture. Let's take a look at things from a different angle. Let's focus in on something like worst stocks over 20. Worst stocks over 20, we're dealing with stocks whose RTs are well below 1. And they still have really poor quality fundamentals. Let's look at a few graphs here. Now, I don't know, you tell me, but that looks like one that's already doing what you want it to do, and that's go down in price. And it just really kept doing that, certainly for the next couple of weeks. And if you held on long enough, boy, there was some real potential in that trade. This one never really got going as well as you would have expected, but if you look at the price activity coming in, you kind of got the same price activity going out into the trade. That one kind of already gapped way down on us, and that's one that you certainly would have gave a look at, but it's certainly also not a high momentum down. That's more like it. Stock's really in a definable downtrend coming in and just kept on rolling. Same with this one. rolled over, coming down for several weeks before you enter the trade. Nothing's perfect, and I definitely want to point that out as well. There's going to be times where even when stocks are in definable downtrends, where you hit a little wrinkle here or there. But it did eventually keep going the way you wanted. This one kept on moving the way you wanted. That one kept on moving for a few days. That one kept on rolling the way you wanted. And so did that one. And so, folks, I could take the time to run it over all the different campaigns, but it's all going to give you about the same visual experience. It's a lot of fun to try to catch stocks hitting parabolic price highs to short them and make terrific profit in the stock market. Boy, what a rush. But the problem comes in when you hit a little stock like a dry ships, and one trade can literally sink an entire portfolio of stocks. And so the last things I want to bring to your attention is, here are the 8 high flyer searches in VectorVest. Listed out on the screen: ballistic new highs, crash landers, duck hunting with industry groups, Hindenburg stocks, Nomo Mojo, pirate shorts, sector peak, Vern's vultures. We are going to be adding in new searches, new corresponding searches for each one of these. We're adding a little line of criteria at the bottom to each one that says that the stock price needs to be trending lower for 5 days. So even though you can find stocks whose price is well above the stop price, like we looked at earlier, now at least you're going to see the stocks turning over and heading down in price, which follows our core philosophy of how to short stocks. And while the performance may not be as great because you got to wait the 5 days for confirmation, and you might weed out some stocks that you could have gotten right at the peak, you're far better off shorting stocks that are already doing what you want them to do, and I think we've seen clear evidence of that. And so selling falling stocks is the better way to go. Folks, those searches are going to be added to your database. They're going to be right in the Unisearch folder. And if I just go over to my platform here really quick, I have one in mind called Smarter Searches, but all of these searches listed the way they are here will be in your platforms right here under Searches Short. And again, the only difference here, such as in the case of ballistic new highs, there's a new line of criteria right at the bottom: stock price trending lower 5 days. And that's the same criteria for each of the 8 strategies. And so that's going to wrap up this week's special presentation. Once again, if you have any questions, feel free to give product support a call. We will be doing the Q&A webcast on the presentation on Monday, 2 o'clock. I'll be right there at your disposal. So please feel free to tune on in, and we'll be glad to answer any questions that you might have. Have a great weekend.